Right, guys, let's outsmart, outtrade, and dominate. Welcome to Crypto EMC. We're going to be talking everything crypto and crypto trade related topics today. So with me, I've got Wolf from Wolf Crypto. How are you doing, Wolf?
I'm doing good, man. Doing good. Like I said, just a little tired from the newborn, but doing all right. Market's looking a little bit more optimistic today, sentiment wise. People are feeling a little bit better, I guess, now that we might be having some peace talks, not peace talks. I don't know what's going on. It's
What's
just
going to
like
happen
chaotic.
now?
So we'll certainly see. But today's show will be very interesting, I feel like.
Yeah, we're going to be live sharing charts as the US Open happens. But before that, we've got Sean here as well. First time guest from Yield School and an L. I can't remember what the L was.
Yeah, Yield School. L's on the just YSL. Yeah.
There we go. Hi, Sean.
Hey.
Give us a quick, brief introduction. What do you do for the viewers? And then we can get into it.
Yeah. Hey, guys. So my background's in education, and I found myself trading stocks a decade plus ago. Started loving it. And now I trade crypto, have been for almost 10 years. And it's great. It's an addiction, but at the same time, it's a passion, you know, and one of my passions is just educating people, making sure they understand what's going on. So yeah, I've connected with everyone here. The community is amazing. It's great being around other like-minded people who are just looking to share knowledge, share charts. And so happy to be here today to do that.
Can't overstate the addiction part. It is an addiction. It's constant. The charts, man. The charts are an addiction.
That is true. Sean, while we're at it, your Twitter channel, give it to me. I can put it down on the screen so it can run through so guys can go and follow you when we're done here.
Yeah, we'll do that.
While we get everything ready, guys, as we know, we're gonna be here for probably close to 2 hours. We're just gonna be talk charts. We're gonna be trading the market open live with you guys. We're gonna be looking at crypto projects we love and probably hate as well while we're at it. And we're gonna be taking requests. We'll be looking at coins that you might be having in there. And I quite like the idea of us maybe at some stage starts bringing up one viewer from the stage.
We can do that, yeah.
So that we can have a little bit of a back and forth and see where you guys are at as well. So if you're keen and you want to, let us know on the channel, and we can try and set that up as we go through the remaining, the stream. So yeah, that's it, guys. Sean, once you're ready, just send it to me. I don't know where. There it is in the private chat. Run Rumor. That's a cool name.
Yeah. Yeah. So fun thing about my last name, Romer, is German, and it was Rommel. And during World War II, my family changed it to Romer. So
okay. Why did they change it? Why did they had to change it? Or was it?
Well, during World War II, they spoke German, and they lived in they were farmers in Central America. And they just decided, hey, we don't want to be treated poorly speaking German, having a German name, living a German culture.
Okay.
We want to fit in. We want to assimilate to the U.S. because they agreed more with the U.S. and what they were doing with the war. So yeah, that's really what it comes down to.
I wonder why. It's crazy. I mean, what?
I know, right? Right?
Like why?
What? No way.
I was watching the. Funny enough, I was on social media last night, and late Robin Williams, a snippet come up where he was interviewed by a German host, and she said, "Well, why do you think the Germans aren't known for their comedy?" And he said, "Maybe because you killed all them." And it's one of those cricket moments. But I mean, the guy was a legend, nevertheless. But okay, let's get into charts. Let's get into charts. So I mean, I see Sean has got his charts running there in the background. Sean, you're going to be talking about Dixie probably. We're going to be talking about Bitcoin. And while we have you here as the first time guest, let's give you the first moment. Where you at, my friend? What is happening with Bitcoin, your trading, and what is it that you're looking at? I see you rocking some ichimoku there as well. So yeah, over to you.
Yeah. So I am more of a believer in cycles than most. And let me just zoom out to a weekly here, because I really think a lot of traders get stuck being way too zoomed in. They're way too zoomed in on the 5-minute chart, the 15-minute chart, the 30-minute chart, right? It's fun to scalp. It's fun to get a quick trade in. But the truth is, when you really zoom out, you get a better picture of everything. And so if we zoom out here, I have what's the cycles are showing me. We have a 4-year cycle low out here, September, October. You know, this yellow can move. It's not really set. This green box is my target. Maybe sometime, maybe we get that low in June. You know, maybe we get it in as late as November, December. That's the thing. It doesn't need to be precisely to the day. And we love to look at Bitcoin fractals and say, oh, 364 days and 2,100, and, you know, whatever. The truth is, I think cycles still reign supreme until they're proven wrong. And so we have daily cycles, we have weekly cycles, and we have yearly cycles. And so when I zoom out here, I can see my periods here. These are my weekly cycles. That's what these waves are showing. And we can find a low here probably in May or so, and we're just hunting another low. Now, the thing is whenever we find a low, like we did back here in October, we saw a left translated cycle, meaning it hits its peak and the left half of it. Okay. So if we're hunting another low out here in May, we can kind of split the cycle in half right here. I could draw a box around it, whatever, but the bottom line is this: halfway through the cycle, we peaked. This is a left translated cycle. And
That's
therefore, yeah, therefore we can
outlook.
expect it to break down to the cycle.
And if I may interrupt your
Sure.
thought process on this topic. So if we're looking at, say, a bullish trend, does that relate to the right, or is it, you know, because
Yes.
now we're trending to the upside, so it's going to be the high would be later in each cycle?
Yes and no. Not always. Here's the thing. If we go back in this cycle, this 4-year cycle, we see that the weekly cycles pretty much work out. That, you know, here's 203 days, 224 days, 32 bars. It's a weekly bar. So 29 weeks, 32 weeks, 28 weeks, 35 weeks. We see each of these play out, and it's not precise. Again, it doesn't have to be a rule. This isn't a rule. 30 weeks. It's going to do this, but
That's
we
like
can
a
see
pub
right here, it's
level.
right translated. This one's right translated. This one's left translated.
Okay.
Mhm.
But in general terms, you would then expect maybe, you know, right translated cycle, you know, peaks, just to kind of give you a good guide. You know, you won't necessarily want to take profit on the second high you get when you're still early in your cycle. It gives you a good frame of expectation management, if I could point it out or phrase it like that. Correct.
Right. I would definitely say so, because when I'm looking at this, if as long as I have daily cycles, it's going to lead to weekly. As long as we have weekly, it's likely going to lead to yearly cycles. And so until daily cycles break down, and again, I don't want to necessarily go into that level of detail right away, but when we look at this, it's simply, do we have a confirmed cycle? Well, for a confirmed cycle, we really do need to go and we need to tackle this high. We need to tackle the high from the previous cycle. And when we see a breakdown like this is a breakdown in structure. Here, when we have left translation, we don't see a breakdown in structure. Actually, this one's the best left translated. The one in late 2023 into early 2024, we see the cycle low hit right here in January 2024. Cycle low, that's what the green arrow presents.
Correct.
And then we see
Stay
left
above that
translation,
line.
but we got a new high. That's the key. And so it's not a breakdown in structure. And then we traded sideways for months and months and months, and people go, what's going on here, guys? What's going on?
It was a
And the truth
frustrating
is,
6 months, though, that, to be honest with you.
it was the worst, wasn't it?
We're
Yeah.
complaining about it now, but I mean, we're soon to
Yeah.
forget. That wasn't a fun 2024.
No. But if you look at this, look at what happens. We have a double from the low, a double from the low, a double from the low, 91.6%, right? We have a 120% move from the low. And here we only had a 70% move. You guys, if you got psyched out in October, there's a reason. A lot of people were looking for another double from the
150.
low or a move up to 140, 150. Everybody was looking for that. You aren't alone in that. Cycle traders, everybody was looking for that. And because we didn't see as good of a move, this showed exhaustion in the yearly cycle because we're gaining momentum, right? 98, 91, 120. And then we have a 70, 69% move. And when we see it break down like this, and then the failed cycle with breaking this trend line, this is a clear confirmation we're in a bear for me, and the cycles reign supreme again.
I'm a big fan of cycles, Sean, to be honest with you, and I can talk you to sleep about cycles and how I navigate the market, and how, from a cyclical point of view, I sold 125. I actually did it publicly on YouTube and on Spaces and everything, so and it's all cyclical. So at some stage I would like to show you that, but now I see you've got some interesting stuff there on the screen. So maybe talk me through that a little bit more, and unless you've got some questions you want to ask.
Yeah,
Sean,
add in here.
No, I mean, by all means, please, Rudo, ask away. I'm enjoying this.
Okay, so there's a gentleman who has a YouTube channel. His name's Camel Finance. I don't know if you guys have heard of him. Anyone?
Camel Finance. I've heard of him.
Yeah. Camel Finance. I mean, he's not the only cycle trader out there, but he's got this really cool indicator. It didn't cost me much. I got in, I don't know, maybe 9 months ago on it, but you can see it showing me the weekly low, the weekly low, the weekly low, and then we've got daily lows. We've got the green, the daily low, the daily low. And so if I'm a swing trader, this is confirmation. We've got a weekly high. We've got a weekly low. It's just a simple indicator, and these fire off, and they're pretty accurate, guys. Sometimes they do disappear, if there's maybe a week later at most, but we've got a weekly low confirmed right here. And that starts out our next, 28 to 34 weekly cycle. Yeah. So this has just been a really good helper. And again, indicators aren't a rule. They're just a tool. It's like, I don't go out with a hammer and say, hammer, do, right? It's simply something I use to put a nail in a wall.
Yeah, indicators, I say they're stupid. They just do maths. In the end of the day, that's all that they are. And they can just point to reoccurrences, and it's still up to us to navigate the risk. And that's what they're actually there for. This is an interesting tool for you to navigate and look at risk. Right. Statistically, probability, from a probabilistic point of view, that looks really cool. So guys, if you want to go check that out, I'll bring up there. This is the channel. This is the guy you're talking about, Sean.
Yeah. And honestly, he posts every day. And I'm not saying he's the only one you should follow. He is the god. He is just a really good break from daily trading.
Well, we must try and get him on. We'll try and get him on.
He really should. Yeah, he's a Brit. He's great. Just had a kid. I think you'd really him great.
Well, it seems like everybody around me just had a kid. Sean, are you also there, or are you still?
My kids are older. My kids are much older.
The youngest is 16 now, turning 16 next week. So,
just wait for the teenage years, William. Just wait.
Oh God, dude, I'm gonna be dreading those already. I have a little girl, and I just was told that her teenage years are gonna be brutal for me. So
kids are.
I'll start graying out. Then.
I'll say this for you and anyone listening: kids are the best at every stage. Just lean into that theory, and you'll be okay. Great. You'll be great.
That's the most optimistic news I've gotten on this so far.
It's that every stage. I like that.
It's like marriage. I had an older couple at our wedding tell us, guys, you hear about the first year of marriage being so tough. It's actually the best year. And we believed it. And it we believed it into fruition, really believed it into being. Our first year of marriage was one of our best. So
it's all just downhill from there.
I think it's mindset. I think it comes down to mindset. It's been great. Marriage has been great. But one other one that I really like, and you guys have probably seen this one, right? I run moving averages. You can see I've got a whole bunch of indicators, but Supertrend, guys, Supertrend is like the biggest cheat button.
Oh my goodness. Is actually, funny enough. That thing is alarmingly good, keeping you in a move once it's starting to happen.
Now I've changed my settings just a bit. I've tweaked some things. And my inputs are ATR period 9 and ATR multiplier 4.1. And what I've found is, and we can pull up ETH. ETH is the ultimate rule follower with this. Now, ETH is in a long right now. And we can see ETH is, I've got some of my levels marked. This isn't really too much a thing here. But ETH triggered a buy just a couple weeks ago. And now we see ETH doing ETH things. We see a pullback. guys, I'm really watching ETH. I think there's a chance. Can't get my measuring tool. We've seen a pullback. I think that there's a chance when we see a pullback less than 15% and we just about hit it. As long as this is the low, I think we could see ETH really move from here. And I have levels marked at 2,500, 2,700, and ultimately all the way up to about 34, 3,500 maybe. But that's a little bit aggressive. I think there's a really good chance we see ETH at least get back up to the 26, 2,700 level. And I think this is a really nice swing trade level, but we need Bitcoin to confirm. And I think this news on ceasefire, not ceasefire, what's happening, right? Iran's kind of going back on what the US is saying, right? Which is pretty typical in a time like this. But if we see a ceasefire truly for a month, I think that gives plenty of room for Bitcoin to run to the high side. And I've got a box up here in between 76 and 78. That's of key interest for me. I've got all sorts of different boxes, right? And you can see I've got all sorts of different squiggles because I teach on this stuff. But bottom line is this: I think we've got points of interest where we watch for structure flip. And right now we're seeing a structure flip from a rejection from this 74 to 76K level. We saw a really good rejection on the daily. Let me get a clean chart and I'll show you. But if we look at this wick down,
what you're saying about that structure flip, maybe before you do that, just explain the structure flip and how you phrase word and show it on the chart, because that is it's a heavy and a powerful term, structure flip.
Yeah. So there's a lot of different ways you can interpret it. And that's the thing with technical analysis. You guys, when I look at a chart and Rudo looks at a chart, William looks at a chart, the different guys that come on this look at a chart. It's art. This is art. You really have to be convicted in your method. Find what works for you. Because if I say something, I see something, it's like going to an art gallery. You look at a painting and you go, I don't get it. I just don't get it. It's not for me. And then I look at something and it's abstract and it's, oh man, I can see the artist's point of view. When I look at this probably looks like a bunch of junk to the average person. But when I see this, I see a clear bear flag. And I see, as long as we stay below these moving averages, we don't have much of anything. But right now we've got so many different things factoring in. Okay. We've got Elliott wave, right? We've got Supertrend, we've got moving averages, and now we're back down below this one, right? There's so many different signals. But a structure flip just simply means, do we have a change in structure? And on the higher time frame, if we really zoom out, guys, the structure is this. If we go and zoom out to a weekly, the structure is clearly down, right? We have a 3-wave move down so far, and it looks pretty blah. It looks pretty blah. Boom, boom, boom. 3-wave move down, and we can expect a 4th and a 5th. The 4th would come here and a move up. And as long as we don't get above 98K, we can expect that the trend is down. But a structure flip can happen in any time signature. Okay. We could go down to a 30-minute and we could say, oh man, look at the structure flip. The trend was down. We're moving down and down and down, right? There's a 3-wave move down. And then we've got to move
that
up.
wave movement too, Sean, sorry for cutting you
No,
off,
you're
but
good.
that coincides with what you said about the super trend saying that we were flipping long here. And I love that.
Absolutely. And the thing is, we get confirmation in the lower time frames, and this is like front running, right? You know, we can trade on a 5-minute, 10-minute, 15-minute, 1 minute. Oh man, good luck, guys. That's really risky. Don't do it. Be careful, not with leverage at least, or something. But when we see confirmation on a lower time frame, and then we zoom out and we're getting structure confirmation on a higher time frame, like on a 4-hour. Look at this. We got a 1-wave, 2-wave, 3-wave, 4-wave, 5-wave. Man, are we ready for a 3-wave move down? We kind of saw it. 1, 2, 3. Now we need a 5-wave move up. 1, 2, 3, 4, 5. From an Elliott wave standpoint, we could see that the structure flip because of a 5-wave move instead of a 3-wave move. Again, there's so many different things. But when I see a structure flip, it's simply this: higher highs, higher lows. To put it bluntly, we have a higher low here. If this low can stay in, guys, we're good. So if I'm doing a trade here, number one, I'm looking for a kind of a return back a little bit. Let me just get my brush out here. So we come down, we go down, we go down, right? Now we go up, we set a higher high. That looks great. And when we come back down, we set a higher low right there. And again, I'm zoomed in, I'm zoomed out. I know it's kind of hard to see some of this stuff, guys, so bear with me here. But when we break structure, and Supertrend shows it for us pretty clearly. If I can just get rid of my drawings here. Supertrend shows it for us pretty clearly. That's why indicators can be great tools. Look at this. Supertrend is telling us, hey, if we break up, break back down, and we break this level, we can expect a candle close to trigger a buy here. And so on a 4 hour, we've got a buy. If we go down into our time signatures, what do we have in a 2 hour? We are on a buy. Look at this, a buy back here. We need to break below 68,650. And if we go down to a 1 hour and a 30-minute and so on, you guys get the idea, right? So I can watch these lower time signatures, use something like Supertrend and say, okay, on lower time frame, are we still bullish? On a higher time frame, are we flipping bullish? And one thing after another just confirms it. And it's a change in structure because certain levels are broken, they're held. We have higher highs, higher lows, and we've got a change in structure here. And again, we see the same thing in a reverse and a short. We see up, 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 higher high on a higher time frame, right? High, high, high. And we've got a low, low, low. We're still trying to flip bullish on shorter time frames. But from a weekly, guys, it's bearish as can be. We have to break above 98,000. And so depending on my trade, I'm either extremely bullish or I'm extremely bearish here, and I'm looking to add to my shorts. And so you have to look at a trade and say, what's my time signature? What's my time horizon? Is this a daily trade? Is this a 1 hour trade? What am I watching for? And that's why trading gets so hard. You have to be convicted and have to have a timeline in place for what your trade is. So if I'm trading on a 4 hour, for example, maybe I can go long here because I've got a low confirmed. We've got a higher high. We've set a higher low, and now we're breaking out. I've got a trigger on my buy, and I can watch for, maybe 73, 74K on here. Maybe we go attack this high 76 from here. Again, it depends on your trade, your time horizon. Do you like going to bed with a 20x leverage trade on Bitcoin? Man, I don't know, guys. So anyway, I talked a whole lot there.
I like going to bed with a 20x leverage trade if I have my
not everyone
my
can
risk,
though.
If my risk proportion is proportioned correctly, if my stop is there and I'm like, hey, listen, I'm going to lose X amount of dollars on this trade if I'm wrong, and I'm okay with being wrong. I think that's obviously if you aren't managing risk, a 20, even 80x leverage play, can be devastating. I just wanted to point that out.
Yeah, man, for sure. So we have different kinds of indicators.
Risk management.
Yeah, I think so too. We have different kind of indicators though. Some fire quickly. What are some ones that fire quickly that you guys really like, or do you guys even trade on indicators? Do you use them?
Yeah. So I use several. So I have different setups for each, like a different asset class. So if I'm trading like the NASDAQ, if I'm trading indices, I'll typically look at like I have like an EMA 9, EMA 20 set up with the VWAP for scalping and trading.
Yeah, that's great.
For long-term stuff, I look at just basic like support resistance levels. I mean, like the NASDAQ and S&P typically just move up pretty standardly. And then they have massive drops, when we have like recessions or market crashes, and then like all of a sudden starts rallying back up again. But so I use that for scalping, short-term trading. But then on like other assets like Bitcoin and et cetera, commodities, I'll use Ichimoku Cloud on that. And I love Ichimoku because it's perfect for this long-term analysis like you're talking about. It's a lot more effective on things like the weekly, the daily, the 12-hour, 4-hour, et cetera, than it is on the daily. But I do like Rudo, if you want to pull my chart up really fast, I'll show him what my chart looks like.
I'm busy.
Yeah, so this is my Ichimoku here, my Ichimoku setup. So this is Bitcoin. Let me just close this. Get more room. This is the weekly, and just like you said, yeah, thank you. Yeah, I try to make it so I don't get like these dopamine hits from like the casino colors, where it's like the red and green candlesticks. I try to remove all of the dopamine possible to
Mine
make
used
this
to be blue and pink. Mine used to be blue.
There you go. I just make it boring as fuck, like white background, like gray background, clear candles, black candles. It's just like, hey, boring. The only colorful thing is my indicators here. So this is Ichimoku Cloud. I've shown this many times in the stream before, but basically on the weekly, it's telling me exactly what you're talking about, which is why I was like smiling and I was super happy when you were talking about your indicators there, Sean, because right here, you talked about we're not out of this trend until, we're not flipping bullish till like 98K. That's exactly what Ichimoku is telling me right here. Ichimoku is saying, yo, listen, this is that range right here. We have to get above that cloud right there in order to flip bullish. And that is that 90,000 to 100,000 zone right there.
That's going to be tough.
Yeah, exactly. We're stuck under this cloud. And granted, we could, like you said, we could just do this simple, like, hey, we're going to, we're going to go long here. But we could have this nice bounce off the 200-week EMA, which it looks like we are. But that doesn't mean we've changed the trend. That just means the market's, correcting to the upside, and then we can get smacked down by this cloud right here and just go lower. It's completely possible in my opinion. So I think that, my indicator is kind of matching what your indicator is saying is awesome here, but that's the weekly. Obviously we have this massive conversion line below the baseline here, which is another bearish indicator. And we have the lagging span, this yellow line below the cloud as well, which is another bearish indicator. So on the weekly, still in a downtrend, still in a bear trend, but on the daily gets a little interesting. So I'm going to look at the daily here. So we're actually inside the cloud here in the daily. Yeah. We're below the 200-week EMA, which is, again, bearish. We have the lagging span breaking out of price action back here, which is bullish, actually. And we have the conversion line flipping above the baseline here, which is also a bullish indicator. The only thing that I'm worried about is that we're stuck in this cloud, which is kind of like a no man's land zone, if you want to think about it like that, where basically if you're below the cloud, it's bearish. If you're above the cloud, it's bullish. But if you're in the cloud, it's kind of like, hey, just wait a minute, let's see what happens. There's a lot of contention happening. So right here, I could easily see Bitcoin and ETH, like you talked about, having that short term, rise up. And I could easily see us getting out of the cloud here at that 77,000 price there, and then it's trying to make its way past the EMA here, the 200-week EMA that I have set up, which is at right now, I think that's 87,000, 86, 87,000. So I could easily see us rallying to that point and then getting smacked down again. But that's the daily right there. We bounced off the bottom of the cloud, which, I mean, you could take that as a bullish sign if you'd like. I think that there's plenty of price action to trade here in the short term. The 12-hour also gets a little interesting. We're actually breaking out of the cloud there. We bounced off the forward-looking green cloud, which indicates bullish momentum. So for those that didn't understand what the cloud colors indicate, the red cloud indicates bearish momentum. The green cloud indicates bullish momentum. And the wider the cloud, that means that the more momentum there is there, the more strength on that side there is. So we have a lot of weak bullish momentum here because of the size of the cloud there, but it's bullish momentum nonetheless. We did bounce off here. Again, lagging spans above price action and above the cloud, which is another bullish sign. Conversion lines below the baseline here, which I don't like. But again, it is a weak bullish momentum here, so it kind of makes sense. All in all, I'm kind of not looking to trade this area because Ichimoku is kind of giving me mixed signals all over the place. But mainly because of the daily and the 12-hour here. Again, we have weak bullish momentum. I could easily see myself taking a long here, though, really along with a tight stop below the cloud. That's completely reasonable. And on the daily, I can see the same thing. But I'm less inclined to do so because I always like to wait for a breakout above the cloud. And what I mean by that is if I go to the weekly here, you can kind of see this like amazingly clean setup right here. So like this is back in, what is that? It's 2023, October 2023. Like clockwork, guys. We had this amazing break above the cloud here. We had bearish momentum dying down. The cloud flips green. And then right here is where you should have longed, right there. Like beautiful. Like we have a flip above the conversion line goes above the baseline. They're still really tight together. Candlestick breaks out of the cloud. We have a lagging span breaking out of the cloud as well. It's just you can't get cleaner than that. It's so beautiful. And then we had this amazing ride up, and that was what was that? It was 28,000, guys. And then we go all the way up here, bounce off the cloud right here, bam, and then we do it again over here, bam, and then we do it again right here. We go in the cloud actually right here, and then that's when we fall apart, obviously. So this is why I don't like trading in the cloud because again, it's no man's land. You don't really know what's going on. The Ichimoku is telling you, hey, listen, we don't know what can happen. Anything could happen. So this is one reason I really enjoy it. It's telling me, hey, listen, you need to chill. And especially on the weekly time frame here, we have massive bearish indicators. So it's really hard for me to take a swing long, if you will. But I could totally see myself doing it with a tight stop. That being said, but yeah, that's pretty much Ichimoku. That's what I'm looking at on Bitcoin. Ethereum's the same way. Here, there it is. ETH actually looked a little bit more bullish on the 12-hour here than Bitcoin did, because we had that massive spike up right here, and we bounced off the cloud perfectly on the 12-hour. Sorry. So all in all, again, I could see myself scalping this. I would probably make a hard take profit at 25.34 there at the 200-week EMA, because I see that as a massive resistance. As you can see, we bounced off it right here. We tried to wicken above it, couldn't hold, went below. So yeah, that's pretty much where I'm at on things. It's very similar to what Sean's analysis was, which is good, because that means our indicators are working, and we're reading the indicators well enough to understand, hey, this is what is probably going to happen, and they line up. So it's nice.
I think one of the best tests, anyone listening, that you can do is challenge yourself to go through your thesis, challenge yourself to go through your indicators, challenge yourself to go through your chart, and can you explain it as well as William just did? If you can't, you aren't trading. You're gambling.
Yeah.
Legitimately, guys, you have to be able to do what William just did.
And also, this is something I use too. I find very helpful with my trading to help me manage risk is, guys, if you're not looking at the VIX, you need to be watching the VIX constantly. I always have the VIX pulled up. If the VIX is down, that means volatility is low. If it's up, that means volatility is high. That's all you really need to know. If volatility is extremely high, I'll usually lower my RR to 1-to-1, just because anything can happen in that market. We have massive wicks down, massive wicks up. If VIX is low like this, I usually get my RR at 2-to-1. Because you have a little bit more reliable structure happening. It's a little bit slower, a little bit easier to read and react to. So just keep that in mind, especially if you're scalping or trading. Just like the VIX is your friend. The VIX will save you on so many trades that you should have got out of way earlier. There's something else I want to pull up here. So I always pull up this chart. I know Rudo's going to be so sick of me pulling up this chart here. This is ETH. Rudo, you full screen. There you go. I was about to say. This is ETH token. So I always talk about this. Sean's like, yo, what is this? This chart looks terrible. I know it does. So, anyways, this token came out back in October.
Guys, that's why he's putting it up.
I'm shilling. This is a token. I'm extremely bullish on this token. Anyways, this is this company called 375 AI. They are basically collecting real world data, like physical real world data for AI and robotics, etc. They have an exclusive deal with a billboard company that's one of the largest in America, where they're putting these $50,000 cameras on 40,000 billboards across America to collect traffic data. And it's exclusive to them. It's an exclusive deal, so no one else can get that vantage point that they have. And that data is extremely valuable. So they're going to take that revenue, float into the token once they get more revenue, of course. And team super bullish. Former CEO of Linksys, their Wi-Fi router company, he started this. And so I really am excited for the fundamentals on this one. But anyways, on the chart, I'm really happy because we had this massive, nasty sell-off right after 1010. And of course, the chart just like looked terrible, exhausted, died down. But now we're actually getting a little bit of structure, and we broke out of this like downtrend. Where is my horizontal line here? And so now we're kind of riding. We're riding this line here. We broke out of that 3 cent range. We're kind of testing it right now. And if we hold above 3 cents, I am extremely bullish on this thing. Extremely bullish. I mean, if you look at the 4 hour here, like we're riding the cloud. Obviously, the cloud isn't really formed that well because this is a very low liquidity token. But my hope is that we get some more liquidity in, some more exchange listings, and we get a little bit more reliable structure there. But just based on like pure support resistance levels and from what the cloud is telling me, from what it can tell me, I mean, this looks good. Looks very promising, and it's only $6 million market cap, guys. So that's my risky play right there for you. I just wanted to go ahead and point that out. Sorry, I always have to shout out ETH. Always have to shout out ETH.
There we go, guys. So get your ETH. Sean, are you going to go buy some ETH now?
No. No, I'm not really convicted. To be honest.
Sorry, Will. You need to go work on your pitch.
Here's the thing. I think you'll be able to get in lower. I think the market, we're on an end of a business cycle.
You're right.
Business cycle.
I'm buying spot on that too. I'm not buying leverage. There's no
leverage on and that's good. But here's a rule to going back to the VIX. The VIX is really interesting. If you look at the VIX, If you look at the VIX, and just look at this. Anything above 30 is a hard buy. It's a buy. It's a buy for me. I mean, if you look at the history, let me zoom out to like a weekly. Let's see how little this happens. Anything on a weekly that hits a 30. Guys, let me just draw a horizontal or that horizontal line. Right? That orange one. Anything above that, that's a firm buy. I'm buying. I'm buying the April low. I'm buying our low back a few weeks ago. Look at this. I'm buying August 2024, the yen carry trade. I'm buying anything above the 30 and the VIX. I'm buying. I have to. Anything above the 50, I might go leverage long.
Yeah. I mean, it makes sense.
It's clear reversal. I mean, look at this. You know, we have COVID. My goodness.
Can you overlay gold on this? Let's make this chart interesting. Bring in the gold. You know, that little circle at the top there.
Let's see.
Yeah, click on that one. It'll bring in gold, so it's going to have the gold price action in there. Yeah, a wonder will probably.
On the gold, Wanda gold would be good. But that works too.
So now you can scale the gold, and you can see, you know, to the left-hand side, you'll have the gold scale now, so you'll be able to manipulate that a little bit. But now you can come in there. So now you can. I see your scales are on.
My scales are off. Yeah, I run things on the left. So.
Okay, but so they're on the left, there should be a little gold scale there. But basically, there you can see it. If you look at where we are regarding good lows, compare that to, you know, smack there in the middle of your screen. You can see when the VIX starts hitting that line, gold, you know, on the blue line was giving good lows. When you had VIX hit that line again, gold made another good low, you know, smack there in the middle of the screen. So you can start drawing out the correlation. So it makes for an interesting way. And we must probably look at it from Bitcoin's point of view as well.
Yeah, sorry, my charting is not the best on that.
No, you're fine. I'll pull up mine too here. I'm gonna do mine.
Go for it.
Same percent scale.
Because I'd love to see that. I don't often chart things like that. I'll go pairs where I'll do VIX/gold and see one priced in the other maybe. But this is a good.
Yeah, I mean, like it. So yeah, Rudo, if you look at mine, like I pulled the S&P up against the VIX here, and this is what we're talking about. So like right here, you had the S&P tank back in 2025 with the, what was that, Liberation Day? Was that Liberation Day, or was that okay. That was like the tariffs, like a bunch of tariffs came out. So we had this massive dip. VIX spiked tremendously, up 130%. Against this, and that was when you should have longed. Like, and basically, what the VIX, for people to understand, it measures volatility. So what that means is when the VIX is up, typically the market is down. Typically the market has tanked. There's a massive spike of volatility that hit, flash crash, if you will. So when the VIX starts inevitably trending lower, that's when the market starts kind of recovering and starts rising. Typically, not always, but just typically. So that's why.
Statistical.
Yeah. That's why Sean was saying he longs, like when the VIX is low, like right here. This is back in COVID, guys. Look at that. Insane. You can't really see the S&P, obviously, because my chart's not perfect either. But right here is where the S&P dipped. And we had the VIX just like freaking go up, 600%. Crazy, dude. So crazy. So, I mean, it's a spot-on strategy. I like that strategy a lot. It's not bad.
And again, it's just the 30 rule. And look at the levels.
Sorry.
No, I was going to say, if you look at the choppiness of the S&P, where it just like continues to just go down and go down and go down.
Yeah.
It's the VIX getting up to like 28, 29, 27, 26. Kind of like where we are right now. Like it could just hover here in the mid 20s, high 20s. But when it gets above 30, it gets a little bit scary. It
does. I mean, and this is the crazy time like that we're in right now with obviously all the war talk and everything, and just like uncertainty around like inflation with oil and everything like that. And like, we don't know what the Fed's going to do because they're going to be stuck between a rock and a hard place, yada, yada. So we're in a really critical point where the market's pretty much telling us, hey, we think, I mean, based on my indicators, market thinks that, or at least Bitcoin thinks that maybe worst case scenarios, not worst case scenario, but like a negative scenario is going to happen. And that is, either stagflation or mass inflation, or maybe this war goes on for longer. And so that's what Ichimoku Cloud is telling me, just based on this rejection that's going to hit here. Granted, if mass inflation does hit, I think short term it'll be a negative, but long term, obviously, it'd be a positive for assets. So Bitcoin should respond positively to that eventually, but obviously the market is a fickle creature, and so any kind of inflation news typically is met with oh no, run.
Right. Yeah. Yeah. I'm looking at the S&P.
That's pretty.
We tried to get back above. We tried to set a higher high on the S&P. Let's see what the S&P does today. If it gets up to 6,700, I think we see a temporary relief. But otherwise, guys, this looks really bad. And I see a drawdown on the S&P quite a bit. I see a lot of room to the downside. A ton of room to the downside. I mean, just on a fib level, right? We could just drag it from this low up to this high up here, right? We've got, so that's some of my zones here. I've got the green and the red, the 382, the 618, the 50%'s a 5,900 S&P. And that's normal, guys. The average intra-year pullback is 14%. And so we look at a 14% pullback here. That's, 6,000, 5,900. I wouldn't be shocked. I wouldn't be shocked at all. In fact, I welcome it. And with the business cycle coming through right now, I wouldn't be shocked if we see it pull back to the 5,700, 5,600 level. That's what I've drawn out here. I think we see it extended out into, a little bit of a relief here in late spring, a little bit of a relief in the summer. And then I think we see, hopefully Q3, we see a nice low. Maybe it bleeds into Q4, but we're just trading in this channel. And I can zoom out. And you guys, this isn't rocket science. You see what the chart gives you. And if we zoom out all the way going back a decade, look at this. We're just trading in this channel. We're just trading in this channel. And I've got all my indicators on here. We'll kind of turn some of those off. You guys get the idea. But yeah, it's just pretty clear to me that we're due for a little bit of a pullback. We just are. And that's okay. I welcome it. But what people say is, and they love to have one thing correlate to another. Oh, well, obviously the market's pulling back because of the war news. Well, the truth is I was looking for a cycle low here anyway. I was looking for a daily cycle low. And I think the S&P, I think the equities market has seen that daily cycle low. I think the daily cycle low is in, and we can expect it to continue to go up from here a little bit. We'll see a little bit of a relief, but it's going to be a left translated daily cycle. And for the weekly cycle, we're just hunting another low. And if we look at these lows, just look at this. We got a low. Oh, it brings all my drawings back. You get it. But, we got another low out here. We got another low out here, right? We can just say, we get lows. We get lows. They happen. We're due for another low. And so that for me is, well, what do you guys look for in a breakdown? Like what do you look at the 200-day moving average? What do you guys look for?
In a breakdown, in a breakdown, I'm looking for typically a break above the 200. I think the 200 is a very reliable measure at if we break above and close above, then I flip long. But if we, break below, close below, then we flip short. On the weekly, it's a little different. So the weekly, like the 200 moving average, the 200-week moving average on Bitcoin, for instance, like we've been riding that. We literally bounced off of it just now on the weekly. So you could argue, oh, we're still bullish, which, hey, we could flip bullish at any moment. I'm not saying that that's not a possibility, but it's on like shorter time frames, I find it more reliable to catch those like shorter long-term or shorter short-term trends and ride those on a swing trade, as opposed to looking at the overall general trend of a weekly chart and saying, okay, we've been riding the 200-week EMA this entire time. I'm just going to remain long, which, if you're a spot trader, you can totally do that. But that's typically what I look at is the 200-week EMA to really confirm if, hey, I'm thinking we're going lower or I think we're going higher. That's the first thing I look at, 200-week EMA.
Mine's a little different. If you're up for a little divergence lesson, I can
divergence. Let's go.
School us here, Rudo.
Let's have a look at. I just want to quickly throw a shout out to everybody watching live. We're about 186 people live, at this moment, according to StreamYard, streaming to 5 destinations. So just throw us a like, throw us a comment, let us know what you're thinking and feeling. I'd love to hear what your thoughts. And then we've got Blackbeard in the backstage, but again, his devices aren't connected. So I don't know when, he needs to just get his mic sorted, and then I can bring him on too. So maybe, Will, you can, I don't know if he's dropping any questions somewhere in any of the Telegram groups. And then there's a comment from Mr. Saul Goodman. I always love this name, Saul Goodman. It just tells you good person, huh? What do you think? Are any of you still looking at basic indicators like stochastic RSI, and MACD? And I want to answer that. That's the only indicators I really use, except for my own one, which is a derivative of that basic indicator. Sean, you've got a lot, and Will, I think you've got a lot, but as it kind of points to it, I mean, look at all that lists. So Sean is busy. And then Peter, our producer, is in Slovenia, back from Italy. Low flying guy was sending me some naughty photographs of him way above 200 kilometers per hour. That's in miles, what, about 130?
Yeah, 200 is like 140 maybe.
Yeah. So low flying from Peter. I hope nobody's watching that's not allowed to know that. Okay, let me talk my charts. Let me show you what I like to do. So while you guys were talking S&P 500, I had a different view, kind of like the other side of the argument. We'll have a look at that at some stage, but let's talk breakdown. And Jeff, 53,000. I hope that's not where you want to buy Bitcoin, but Jeff 53,000 says, great show, and thanks to all of you guys for what you're sharing the alpha for free. I mean, come on, this is amazing.
Thanks, Jeff. Thanks for being on.
So here we've got, this is now my Bitcoin 1 minute. I'm still rocking 1 minute here, Will, like crazy. I have to say, I'm enjoying the 1 minute.
Rudo's crazy, everyone. Rudo's crazy, rocking the 1 minute.
Yeah, for the last 5 days, I've been trading Bitcoin 1 minute, Sean. So that keeps you on your toes.
Careful.
Very, very careful.
When you start at the stream, what people do is they zoom in too much and let's zoom out. I was like, okay.
Well, that's, again, it's art. It's art. I can't do it. I've tried, and I am too big a failure. I'd rather swing trade it.
Well, I'm gonna show you a strategy that you're gonna love.
That's not to say I don't scalp. That's not to say I don't day trade and scalp, though.
Yeah, I mean, if it works on the 4 hour, it can work on the 5 minute as well. It's just
and I love Tau here. I love Tau here.
Tau is an interesting one, but I want to show you something. I need something that's been around a little bit, so we can use Bitcoin, we can use gold, we can use silver. Which chart would you want me to have a look at, Sean?
Let's see silver. Let's go for it.
So I was thinking you're going to do that. Throw me a silver curveball. So let's do silver. Let me just quickly load my silver. Where is it? I've got gold in front of me. There we go. There's silver.
Anything that's down 40%, though, people are going to go, why? What's going on here? What are you seeing?
Now, this makes for an interesting chart, why silver and gold, because I think to an extent what we've done is we've completed, or in the process of completing, an emotional market cycle. This is where the term crypto EMC comes from, which is, that typical Wall Street cheat sheet image I think everybody knows by now. I can probably find the tab to load it, but I mean, everybody knows that by now. And the trick when you're going parabolic like we have here, and this is where your question comes, just because it's now 5 minutes later, I haven't even started answering it, is when do we confirm a breakdown, and what do we need to do to, to not get out? Because, I mean, if you look at this, you would have maybe sold silver there, and then maybe you sell silver there, and then it keeps on rallying, and you want to know when it is just a pullback as opposed to when it's a breakdown of structure. And then obviously what Will said immediately after, or Willie. I like the deep end guys call him Willie, not Will. Willie. I've been spying on your late night streams. Well, they're late night
Okay,
streams.
okay. Okay. You found my OnlyFans. Got it.
There you go, Willie.
I'm gonna need one after. If the market keeps treating me like this, I'm gonna need.
You're
an
gonna
OnlyFans.
go
And,
OnlyFans. That's it.
Yeah, I'm gonna need one.
Okay, but in any case, now let's get to the interesting thing. So there's before we unpack this, we need to understand divergence. And obviously, Sean, you understand this, but for the viewer out there, there's one divergence I want to try and point out to you. And the way that typically is that we see price go and make a higher high, but then your RSI at the bottom of the screen or on the top of the screen, the simple indicator, will probably be doing something in the opposite direction, not making a higher high, making a lower high. And this then gets branded typically as your strong bearish divergence. That's it. All we need to know from that thing. Now, terminologies that you guys need to remember when we do have a strong bearish divergence like this is pivots, which is probably the only big terminology. And that is that point at which the RSI decided to turn, or the 2 points that you're basically using to express or show or draw the divergence out on chart. So that pivot is important. And that brings me to the next term then. I use, as I call it, pivotal support. Because once you have a pivot, you do have aggression. You've got a scenario where it's simple and crystal clear. The market is trying to form an opinion whether the trend is going to continue on or whether this is expensive and it's starting to retrace. So pivotal support and resistance is more important than arguing any other support or auction theory levels, meaning full numbers or half numbers or quarter numbers, those kind of things. So understanding this principle from a divergence point of view, then this then makes it easy for me then to move on to the next phase of our answering the question. How do we know breakdown, and how do we differentiate between a breakdown versus the market just retracing? So if we have a look at, let's move into this scenario here, silver. And I'm going to go to the line tool because, yet again, to just express divergences, especially if you're new to this, it's easier to just look at the lines as opposed to try and look at candles to define where the top is going to be. So it's just going to give you a simpler visual representation of what happens. So now with that, you're armed with pretty much a no-brainer almost. If we look at where we're at right now, there we had pivotal support, and there we had the market create a pivot on the RSI, and there we had the market trade higher, but the RSI did the opposite. Hence, we've got a textbook clean, strong, bearish divergence. Now, the frustrating thing, once you snap this as a newbie trader, I did this. I've got it hooked. I'm going to be trade genius going forward. And then all you see is strong divergences, and then you end up creating or getting a strong divergence that is there, making a higher high, but the RSI is making a lower high. And then, come on, man, can't be so wrong. And then you go and you get another strong bearish divergence. It has to sell off, and it keeps on running, and it just eats you up. And then at the one stage you sit and you say, I should have just longed the bloody market, because trying to predict the top has been taking me out and costing a hell of a lot of money. I see Blackbeard is back, so I'm just going, he's here. Hello, Mr. Blackbeard.
Hello, can you hear me?
Yes, but I'm just in the middle of a topic point, and then we'll grab in there. So nice to have you here with us, buddy. Okay. So now with that kind of mindset and understanding divergence and the frustrations of that, it brings me to the how do I then differentiate between the two? And it actually is very simple. If you look at any of these strong bearish divergence, and you now know the initial pivotal support. I coined the phrase, I call it my thou shall not cross line. Literally this, if it wants to be bullish and it wants to shake you out of what is clearly labeled as a bearish thing, price will respect that support level. Now let's go back to the divergences of the, the ones that the market just basically wrecked you out. So I'm going to use a vertical line, and then I'll have another one that I'll just pull around so that we can see the pivots on the RSI and don't get, like a false positive. So you can see what happens with price as soon as we have our divergence. Okay, what does price do? And let's bring up the candles. Price will respect or stay or claim that level. And this then means that at this stage, your short is good. And at this stage, you can dream that the short's going to sell forever. But as soon as we start trading above that level, that's the warning sign that this strong bearish divergence is just like your Elliott wave, 1, 2, 3, 4, 5, probably just the beginning of the divergence there, and probably there's going to be many more as it goes. And as you then keep on doing just that, you'll see that that support level remains the important one as we go through. So now, if this is going to remain bull trend and we start making higher highs, we will fight and we will constantly get that level respected. And then you can continue onwards. Oops, sorry, let's just take that away, all the squibbles. Then you can continue onwards. And as we go through our next big move, there the RSI starts turning. Okay, so here we are where we have, let me see, there we've got divergence again. Okay, let's bring in the candles. RSI is turning around. Okay, there's your divergence. All right, we're falling below it. You're in a short, you're feeling great. But what needs to happen is, bring back the candles. As soon as we start trading above that level, you need to worry, because now we are not reversing. This was just mid-wave. And from this point onwards, you're not shorting or looking for any more divergences. The same then happens at all these levels. So where we're at right now, if you think about this, one can argue there's strong bearish divergence. Okay, what happens for price? It's fine, but as soon as we trade above this level, okay, you can start dreaming that it's going to go up. If we lose this level again, you can start worrying it's going to go down. And that's then, for me, the telltale sign for a breakdown is if we start trading and confirming structure. I mean, we all know a wick is, or a candle is, that's not structure. But as soon as we start trading and building structure below this level, it's over. And now you need to take note of that. Same then will be true for a Bitcoin chart. We can quickly load a BTC chart, and I will do the exact same thing for you. There's Bitcoin, Bitfinex. That's my gone. I don't want to delete that. There we go with Bitcoin Binance.
So you've got this here. So, some people call that accumulation. Like if we have accumulation in a zone.
Correct. Accumulation or distribution. Yeah, anything around that. So there you have it again. So if you think about Bitcoin at this stage, there's your first real sign of strong bearish divergence. And, if you're now looking at that, that would be your false sign. This is now 2021. What does price do? It pulls back to that level. And as long as we stay above it, even the market is exceptionally strong. The momentum is still there. And you can see as we start moving the goalpost on, as we go on, we make higher highs. We still make clear RSIs. Now we're starting to trade and chop around that range. But in that area, this could have been just another move. As traders, we don't know the future. So you go long. And the hope is what? You delete strong bearish divergence. And we did it again. And then from that point onwards, what did we do? Fell below it, made a lower low, created structure. And there's your warning sign that this divergence is now in effect strong and ready to press on. The same then happened for the lows. If you look at the lows here for Bitcoin, and we look at where price is. So you have your, okay, now it's time to be bullish. We've got strong bullish divergence, okay? But what did price do around these levels? It bounced. It didn't reclaim that. So that's actually a bearish signal, not a bullish signal. And then it went and made a lower low with more divergence, or roughly in this instance close to it. And then from that point onwards, what did we do? We pushed on and did the whole thing again. And those higher time frame analysis, if you then look at this, like you say, zoom out to the higher time frame. If you look at this, you'll see that the key with any divergence, once you draw it after the fact and it feels like, okay, we're there now, you just move to this point, is that there's one telltale sign. Price reclaims pivot number 1 and trades above it or below it, depends on the direction. That's the cue for me. Trade, meaning creating a structure. That's the cue for me that now we need to take note. This is a launch pad for more. In this instance, to the high, and in this instance, to the low side. And that's the main reason. This one was the main reason when we were here on YouTube. We had our divergence, we had a sell-off, and then we had 3 weeks where it just didn't have even any power to get to these levels, and that's HODL your shorts. And why I support what you're saying, relief rally to the upside short term, but the analysis and the TA doesn't point to anything other than a lower low coming, because we don't even have a pivot, or we have a basic pivot at this stage. No divergence, no stress in the market saying that the bears have overextended themselves or something like that, or any real true discount to say that we're in a bottom. And so there's the answer to the question from my point of view. 200 moving average seems like a easier answer, though.
I think for me, it's when you, and this is why we're in the space, right? We talk to others. We can't be narrow visioned. I can't focus on one indicator, one perspective. I can't.
Correct.
I need you guys. No one should go this alone.
And that's basically and now if you start leveling or layering that into time analysis, like we've got here for Bitcoin, and this was now this morning's stream, we were debating Elliott waves. I had a Elliott wave guy on, but if you look at this from a pure momentum point of view, and I just want to show you this chart while I'm talking. I have the floor. I'll make it nice and big, and switch this to logarithmic, because we want a little bit more of the cyclical nature of things. This is why when I looked at the divergence as well, it was more important for me at this stage, because if we look at Bitcoin from a cyclical point of view, maybe a monthly will still work in this instance, just from a visual point. What we found is when you have your first halving 1 to halving 2, those are the red vertical lines, all the halvings, and you put a time analysis, a time fib on that, just a standard time fib, nothing too tricky. There's the tool for the viewers, a time fib, and you look at the 38.2, which is your golden ratio numbers, your 38.2 and your 618. You can statistically, between these 2 points, see that around the 38.2 we topped, in this instance a little earlier, but there was a high, and then at the 618 level we bottomed. And now the trend, when we talk about trends or anything like that, I mean, all that we're saying is if there's a probability that it will occur in the same way. So everybody, if you trade, you believe that trends and cycles happen, because it basically points down to the core of what we're doing. So if you look at that again, when we reach the 38.2 between the halvings, this is the beauty about Bitcoin. We know when the next halving will be, always. So you can project that into the future. Around the 618 we topped, around the 38.2 we topped, around the 618 we bottomed. So statistically, this is now starting to form a trend. Cycle number 3, halving 3 to 4, we did the exact same thing. So you see here we had that major sell-off in the market, had this relief rally that basically just trapped everybody and made them firm believers that we were going to go to the moon at that stage as well. And what happened? Within a month or week, give or take, like the cycles, it's not a perfect, it's always going to be, localized around that time. We had the top, we had the bottom, localized. That FTX little shakeout saw price go a little lower, but nearest no difference, 19, 15 from where we are today. It's not a big deal. And as we were going through, for me, I projected the next halving number 5, and I used this chart to basically keep me in the move, not just getting discouraged out of any of these, not letting any of these divergences get me to sell too quick. And when we got to this line, we had strong bearish divergence on the weekly. I took note of that because for me now, statistically, the odds are that the move is over and that we're only going to see August this year a low. Yet again, will the low be something like this? Will the low be something like this? I don't know. You don't know. Nobody really knows. So we do take these things level by level. We don't want to live off a prediction. But yet again, statistically, this is going to be where we want to try and get in. And then that makes for an interesting where Bitcoin could potentially be next. And this makes for the argument, is this now going to be corrective? Meaning, are we going to be doing an ABC? Or are we going to be doing, to build up for another wave for long term? What are we going to do? We don't know. But now we already know that 2029, roughly, I mean, these levels are going to change slightly as the blocks get mined. And there will probably be a high of some sorts and a low of some sort until the cycle nature breaks down and we need to create a new system. You have to believe that this is going to be true and stick to that. Stick to your guns, straight your art, like you said. I am, by all the chart artists, I love to draw on the chart. So that's everything from me. I don't know if you have any questions. Other than that, no.
No, sorry, I was in the middle of a trade there, guys. I just got stopped out again.
Oh man,
I'm done trading for the day. Let's just say that.
I'm waiting to short
I'm so pissed. I'm so mad.
No worries. I'm waiting to short.
Hey, again, risk management's key. Like, I'm not underwater or anything. It's fine. I'm still well within profit, which is nice. But it's just like, God, I hate this market right now. I hate it. I despise it so much for day trading.
Don't stress, man. Don't stress. So this is a really good buy area, demand zone for Bitcoin to try and go long, 71,200. I'm just waiting for a little bit more structure. We're looking there. You saw a lot of, this is now 1 minute time frame. We had a little bit of a whale accumulation around these levels there. And 5 minutes. Let's just hit this on the 1 minute. Makes for a more interesting chart. This is now really short term, just giving you an idea where the liquidity is, guys. So what we have here is we had a lot of whale volume enter the market, with whale sellers entering the market with very little follow through. So the argument was, if you wanted to look for long, this would be a good area because then the bulls are building a base. We had more whale sellers enter the market around this area with very little follow through, and they got squeezed, but we held the supply. So the only time that I really want to try and short is when there's that wick, that stop hunt, and then maybe there's no follow through at this stage. So we didn't get that. So that's the statistical short area. And then from this point onwards, when we got back to this, we had bulls enter the market again. Let's do that. You can see the bubble there, whale volume entered, but with very little follow through in respect. So from now, the market has turned bearish, and the whales on this side now is in favor of the bears. And any of these lows, they're going to keep on pressing price down. And unless we see some serious pivot to the upside, this is now a short-term bearish trend. Point and figure wise, which is a Wyckoff thing that I use, we've been bullish, angling at a 45-degree angle, looking at price over volatility, not price over time. And we have support at this stage. So if we build a little bit, chop around, it's okay. And that's why I'm interested in that 71,200, because we could potentially do this. There's no unfinished business here, so there's no reason for us to go low again. It's just accumulate, absorb the bears, and then potentially there's the breakout for us for today. So I'm keeping an eye on that, guys. It's still early days. Let this thing kind of run. We're only 1 hour into the US trade. New York happened at around, the big volatility happened at around 3:30. And all of this is still just range-bound price action. So it's not going to necessarily make a lot of sense if you're trying to look for a typical stay above the MA or the VWAP kind of thing. It's going to chop around until this.
Yeah, and that's what got me, guys. The chop is what messed me up today. Just FYI, I was trying to time the chop, and the chop timed me instead.
And you can see it here, because basically what you have is, if you study the impulse of what's happening right now, let's take away the RSI, and I'm just going to do this, and I'll switch off the big trades now. If you come on, there we go. Okay, so if you look at this entire move from a volume delta point of view, not volume on itself, because volume itself doesn't tell you much. For every one Bitcoin bought, there will be a Bitcoin sold. So you don't know whether it's bull or bears. You just know there's a lot. But if you look at the delta, that's how the casinos and betting agents work out the odds to see whether the odds are in favor of bulls or bears. If you have the delta data, it tells you who's compromised. And the delta is that everybody was betting on the breakout, so positive a bull delta. Hence the fact that where we're at right now, if we want to remain bullish, we cannot fall below the point of control where the most volume is spent, because that will trigger a sell-off. So I don't want to buy any more dips in order for this to go on.
Yeah, exactly.
And the bear delta itself is sitting at this stage. So what happened was, as this was reaching resistance levels, obviously there's strong bearish divergence. We want to short because we're at the top of a large 4-hour range. There's reason for that. It's nothing wrong. And that's why I said to you earlier, well, it's okay if you took a stop on your short, because the TA was there. But the bear delta at that stage was basically pointing to the fact that, hey, these guys are going to get compromised as soon as we weaken that. And that's why you've got that stop run that's sitting in there. So this makes for an interesting dynamic. And then obviously if we switch on, let me just switch on the big trades again. To have a look, you can easily see how everybody now starts positioning themselves. So if you look at this, you've got a lot of seller pressure in the market right there, as we've now just shaken out the bulls. The bull delta was positive. This is a bullish move. And then the whales from a bearish point of view came, absorbed all the supply, and were able to aggressively push price down, making the big bull whales turn on their stops, fall back onto their own backs. And that created this big move that we were in. And we were in this yesterday as well, when we looked at these lows there. Same play. So we had that play out earlier this morning, and then later on last night. And now what you see is you had a lot of bull volume entering the market there. You had bull volume enter the market there. And the funny thing is you had a lot of bear pressure, but with very little follow through, which tells you that the delta at this stage is skewed into the bull's favor, because the bears, although they're giving you a lot of supply, they're selling BTCs, they don't have enough to take aggressive control of the market. And at that stage, this is where the big whales started kicking in and created the stop hunt, where a lot of sellers got taken out, and they supported that by taking more trades. You can see the little bubbles. I'll zoom in there a little bit now. And now you've got that follow through and this little battle that's happening right here. That's the chop you want to avoid. What the price will do is it will come back, the 70,200 level, this zone, that flip where you were talking about earlier, Sean, when you start switching a structure and you flip it to the other side of the structure. This is where I want to see this entire structure get confirmed, and then we'll build a launch pad to try and drive price on higher. And that's maybe what we need to, we kind of need to wait for. So zooming in on this, then again, going like crazy, like say 1 minute, trying to paint this picture for you. I'll just delete all the brush strokes and do that again. So if you now look at this, you can see already we've got absorption entering, meaning you had a lot of bears selling these lows, trying to push price down, and bulls defending that with very little follow through. This means we will probably still go down lower. And this point of control that we had, where all the volume is, this entire zone is where you need to buy the dip or try and look for the long, because this is the base or the floor for that move. And fall below that, then you want to be out, because clearly then the bears have control. And then you can trade that bear momentum. And then we can say, okay, right,
Short,
go.
let's go.
No, drop off and go to these lower levels. And but for now, that's that. And yeah, so that's basically where I'm at right now with this. And you can see the dynamic between the bulls.
What was
and the
that?
bears.
Was that price there? Is that 70,898 right there? You said that was the
Yeah,
range trend support.
898. That level actually comes from a different zone. If you look at this from a 4-hour point of view, and this paints a nice picture as well. If you take away the noise from a 4-hour point of view and you apply the same logic, let's have a look at this range. Sean, if you have any questions, you must interrupt, and Blackbeard as well, guys. Please interrupt if there's anything. So if you look at this from a 4-hour point of view, you can clearly see that the delta, there's a lot of bears, bulls, a lot of bears. So the delta at this stage, let's just make sure this is on delta. Yes, and I'll put it on the 4 hours so it's just a little cleaner. So if you have a look at the delta, you can clearly see for this entire range where the compromised buyers are. The bulls are there, and you can see how they're trying to buy this test of support here. So this is where the betting guys are saying, listen, we break out of this range, we need to now go. So they need to buy. Aggression needs to be entering there. And that means then from this point of view, the top of the range, that level, 70,800, is where price needs to be defended. Anything around this on the smaller time frame is chop, but it's chop serving a bigger cause or a greater cause, is to try and absorb supply so we can move to the upside. And fall below these levels, then those bulls, the delta, all these bettors, they've lost, and they're going to be a lot of volume, you can clearly see, so a lot of promises to sell if I'm wrong, entering the market that's going to drive price down. So we have to be cautious at this stage, keep an eye on that area. If we see structure breakdown and we see these guys losing, it's a good time to short, because then we've made a double top, strong bearish divergence, fallen below the pivot, all those other stuff as well. And we could potentially see price then reverse. So yeah, that's my play for today at this stage.
No, I love that. Thank you for the explanation there, Rudo. That's this is why I love the streams. Is Rudo is able to break down all his amazing bubbles and his Buddy Pro indicator there. Two of which I don't use the bubbles. I need to update to the bubbles. I know you just added those.
Yeah, I added them a while ago.
Yeah, I need to update my chart here, but I have used the Buddy Pro in the past, and it's a great tool, great indicator. So good on you there, Rudo. Bitcoin moving a little higher here since market open, trending a little bit, kind of chopping around like you said. It opened higher, and then we've kind of just putzed around. So I'm not really trading this today for sure. Like I said, I mean,
this is interesting because if you look at this, you've got strong bullish divergence. I'll bring in the RSI. You can clearly see there's RSI's turning to the upside. But now the problem is it's twofold now with a strong bearish divergence. So the first thing is that I explained to you guys. Now there's your support, your pivotal support. And as long as we can keep on locking candles above that level, and you can clearly see they are absorbing supply. You've got whales trying to defend this range on the small time frame where we are right now and the higher time frame. So if we can start locking in and building this and sweep out these guys, then when we come back to this range, it really becomes a good point for you to try and buy this. But if we don't get any new bull follow through in this area pretty soon, this is the typical fake strong bullish divergence where it's just moving in there, it's chopping around, and then goes even lower still. So you don't want to try and time the bottom. I hate trying to do that. I want to see the bears lose with some proper bull behind it, and then we can get ourselves into the move. Last night's move, we can look at yesterday's move where we went to 60. This is now 1 minute. I probably need to pan back a lot, but you can yeah, there we go. Not there. It's almost there. There we go. So you can see the same thing play out again here. So what do you have? You've got strong bullish divergence. So retail traders and me and Joe Public, we're all going to look at this and say, okay, right, you see, it's starting to turn. Maybe this is the bottom. And then it's chopping around, and then it starts meddling below that support level. And then what does it do? It goes and it takes you out one last time. And that's only when the bulls, the real whales, start coming in, and their volume matters because you see movement. And then the bears, they try and defend all their worth, but the bulls take control and their volume matter. They start moving price. And yeah, that's what I'm trying to wait for. And typically the buddy indicator overrides the candle colors to define whether we're in a trend, bull trend, bear trend, the momentum, and those things. So you'll have all these confluential factors that runs with that. And Sean, if you want, just drop me your TradingView username. It's a paid private indicator. I'll hook you up so you can go and play with it, seeing that you love your indicators so much.
Yeah, absolutely.
So back to where we are, back to your trades. I want to take a trade within the session with you guys, and see if we can get in on, where's that little zoom to the latest price action button? It's disappeared on me. But let's see what's happened right now. Let's quickly clean the brush strokes, and there we go, and clean those brush strokes. Come on, there we go, and let's see where. So you can clearly see. Now we're just chopping, and all this bull volume. It's not a right time to buy the dips, not the right time to look for this price, because they have not come to defend it, and they weren't able to do anything against the bear volume at this stage. Okay, until that happens, you hold. You hold. And if you were scalping short term, I mean, there you had a buy zone fail. So I always say, good buy zones, when they fail, turn into good sell zones, and there you have that flip. Indicator flipped on trend as well, showed you the momentum is there. And unless, it maybe looks like it wants to, but unless that changes, you're good holding a swing short or a scalp short.
I'm done. I'm done trading for the day. Don't tempt me, Rudo. Stop tempting me. I've told myself I'm done. I'm out. I'm out of trading today. I'm not trading anymore. I'm already down. Man,
press that red button. You can do it.
I'm not doing it again. I pressed the red button 2 times already, and I was wrong 2 times in a row. Okay, so the third time's not the charm here, guys. Do not revenge trade. Don't ever revenge trade. It's terrible. Don't ever do it. It'll mess you up, guys. I'm emotionally tore up right now. I'm also very tired. So I know my judgment is not. My judgment's off. My judgment's off, and that's why I consume cold brew coffee here in Florida.
Yes.
Stone coffee is my favorite drink in the morning. Gets me right up there. It's the best fuel for you. 50 grams of protein, 200 calories.
and
use my code WolfCrypto William at checkout for 10% off.
Yes, there you go. That's it. Blackbeard, what's up, buddy?
Blackbeard's like he's
all right. Here we go.
Right now.
He's drinking his coffee. He's out buying.
You always make me want to get some coffee, man. I don't know what's up with that. I'm doing good. I just joined the rest of the show. I'm sorry I missed the first part. I had some difficulties in real life and on my computer. So, I'm not really doing much today either, because I just kind of see I'm in an okay position to not do anything. But I have been, like I said yesterday, trying to get back in the swing of the price action, the flow of the market, just getting back into the lower time frames a little bit. Sometimes, even if I don't trade those, it's good for me to keep an eye on it, because then when you zoom out, you get a better picture of what's going on. But yeah, that's what I'm doing today. Nothing crazy. I have a lot of stuff to do around the house, so I think I'll just.
Exciting.
Yeah. If you stop out, you need to do your chores.
Yeah.
Literally.
Something
go change the diaper. You just took a stop. You need to go change the diaper.
I took a trade yesterday, holding my daughter in my arms. I took a trade and made a really good 2-to-1 profit on that one. It was awesome.
Yeah, yesterday I traded.
Baby's good luck, guys. Baby is good luck.
I traded one of the charts that I shared yesterday, just a little, to get something that looked like a no-brainer pump. I got that yesterday, and then I was like, all right, that's good. I didn't deserve that one, so let's not push it.
No-brainer pumps. We love them. We love them. So there's your charts.
Okay.
Sean, any comments or anything else? What are you trading right now?
I am in a Tau long. I've been waiting to flip short, but I haven't seen anything telling me to flip short.
Good man.
It's
Me
not
neither.
showing anything. So
Tau is
Oh,
interesting.
one-
Tau is such an interesting play.
I'm spot
Yeah.
Tau, so that's definitely
that's great, dude.
Yeah,
Yeah, I mean Tau. It's gonna run again. I think. Like Tau is telling me, it's like just like, hey, let's run it up even higher. Like it's 365 right now. It's incredible.
Yeah, I'm in an ETH long from 2029, but other than that, those are my only 2 trades.
yeah, I do have some spot bags that I just kind of rolled margin profit into. But what I found is that when I buy something spot, I pay less attention to it. So I can't forget to look at Tau in that way, you know. Like I would love to maximize the profit on it, so I need to pay attention to it. Just because it's not on my margin list doesn't mean it's like something I need to stop paying attention to, because that's how I get screwed sometimes. I lose 20% sometimes on things like that.
When I'm in
I'm
a
actually
trade,
gonna
I
open
try
up
to
an
move
ETH
it.
long too. I think. Sorry, go ahead.
I was going to say, when I'm in a trade on an asset, I move it up in my trading view list. So I have like a specific section of things that I'm holding, things that I'm currently trading. Then I have a watch list as well.
I love.
And if you play in those 2 things,
and I just learned that you can drag an asset to the top of your watch list.
yes, sir.
I don't know why I didn't assume that they would do that. I just never tried it. So that's good because you can prioritize your bag. Like if you have more of this, put it up at the top. If you're trading this more, put it up the top.
And you should.
What I like to do maybe as a hack for you guys, this is my phone.
Yeah.
So TradingView allows you to make these little tiles. And so if I'm holding a bag like you're talking about, like the Tau bag and so forth, I assign one of those tiles a value, you know, so in all the various, screens. So there's 3 different screens back and forth. And then the stuff I need to keep an eye on, even if I'm not in front of the screen or maybe busy, there's always a quick way that I can just keep an eye on the pricing. So that works for me.
Yeah, Rudo, if you want to share my screen, I'll show you the NASDAQ trades I took here, the bad trades.
Yeah, show us where you lost. I think it's important to learn from losses. So can you show us where you lost and what your conviction was?
Yeah, so can you see my screen? You guys show my
just
screen
need to take Blackbeard's screen off. Give me a sec. Flying.
Here we go. All right, so this is
hold on one second. Sorry, I want to get this out because I did want to take just a few minutes of your time, even at the end of the show, just if you're around, to give you a little update on the D-Web trends, because I think you'll like them.
Sure thing, buddy. Let's do
it. You better include me in on that too.
We'll do it right after. Let's talk through Will's shitty trades. Come on.
Fuck you. Anyways, so this is MNQ. It's basically micro NASDAQ mini. So the way futures work is you buy contracts and lots and whatever, and micros are cheaper. They end up being a little cheaper, and you can buy in size with them with smaller accounts. So that's what I do with my prop firm. So here's MNQ. If you zoom out, I have Asia, London, and New York session here. Mapped out. I like seeing that because there's usually really good signs of liquidity in those zones. So obviously with Asia low, you can kind of count on the fact that, hey, if we bounce here, maybe we'll go a little higher. Sure enough, or if we break through, we break out to the low side, that could signal a trend change there. Because with futures, kind of like crypto, it's almost 24/7. They take Saturdays off, I believe, or Sunday morning off. But anyways, so here's the 3-minute chart that I use to scalp. So I do zoom out on the 10-minute here just to kind of confirm if a trend's happening or kind of get a bigger picture here. Now, what's different about this trading setup is I use 3 separate indicators. So I use one called CBC Flip. It's from a friend of mine named Maple Stacks. He loves this indicator. Basically, it's really good at it's not perfect, obviously, but it's very good at signaling a trend change, especially for scalp trading. So if you see a green flip here, that's usually, hey, you should go bullish here. If you see a red flip, hey, you should go bearish here. That's typically how it works. I like seeing it on the 10-minute chart because it's a little bit more reliable there. But 3-minute isn't terrible at all. I've actually tuned this to be a 10-minute chart as well. So when I zoom in, this takes 10-minute time frame into account on the CBC flip. That blue line there is the VWAP. And then I also use EMA 9 and EMA 20. And the reason I use EMA 9 and EMA 20 is because typically when you have a cross of the EMA 9 and EMA 20, that's a really good indicator of, hey, this is a trend change. You should, go long or go short here. So when the 9, so like right back here, when the 9 crossed the 20 right back here, it was a trend change. We went lower. And then right here, we got kind of faked out. So there is fake outs, obviously, that happened, especially in scalping here. We crossed the EMA 9, crossed the 20, and then got faked out, went lower here briefly. And then right here, obviously, it happened again right here on the cross where the CBC flip happened. That's actually a great setup right there. You could have just shorted on this candlestick and then took a massive profit on the scalp there. The reason I got messed up is because, let's back up here, get rid of my drawings. So you can see my arrows where I traded. So this is where I shorted. This is where I stopped. So right here, the VWAP, to me, like we had this cross. So we had CBC flip 1. So we had this red CBC flip signaling, hey, go short. And then 2, we had the cross right back here. So we had these 2 indicators right here telling me, hey, listen, we're going down. It's all downhill from here. And I'm like, all right, cool. So I'm going to short this. Especially seeing that we broke the VWAP and we came right back up here. And so what I was kind of anticipating was, hey, we broke below VWAP, we come up, we're testing VWAP, now we're kind of chopping in this VWAP range. I can short here and set my stop pretty tight in order to, like ride the trend lower. Because again, we have this widening gap right here with the EMA 9 and the 20 signaling, hey, this trend is going. And then 2, like we broke below VWAP. So I was like, hey, let's just go ahead and short. What obviously counted against me was that VWAP held. The VWAP held right here, and we had a massive bounce on the VWAP. And so I stopped out right above the EMA 20 there. And I was risking about 2 to 1. So I lost my 1, which is totally fine. And then moving on. Anyways, I decided to try it again. Because we had this massive, again, CBC flip right here. Massive trend change signaling with the cross of the EMA 9 and the 20, which typically works out for me. I usually have about a 66% win ratio on this. And so this typically works out. Both of those happened, went below the VWAP right here, broke below. And I was anticipating we were going to have a run up here in this zone and then get rejected and continue the trend lower. Obviously, I shorted here and we continued higher and went above the VWAP and I got stopped out. So that's just how it goes, unfortunately. We had this massive wick up here. Something that I've noticed is that we're like Rudo said, we're chopping between the London high here and the London low, Asia low, or whatever market you want to look at. Really, we're having this little bit of chop happening. So I don't suspect we'll really have any clear direction until we break out of London high or Asia low completely. Especially on this one. So yeah, there was my 2 trades today. I lost again 2 to 1, so I lost 1 on each of those. Nothing crazy. It's to be expected. I mean, that's why you manage risk, guys, instead of stops. But yeah, those are my 2 shitty trades. VWAP proved me wrong each time, got faked out each time. It is a choppy market today. So there's my trades.
The one thing that maybe points to that is sometimes there's also that, what is it? What do I call it? Edge decay. That happens as well. So what worked beautifully, and then at some stage it stops working for a while. And we normally call that our losing streak. I'm in a losing streak. But it might just be an edge decay to a point, and then it starts kicking back in. So, yeah.
And what's really funny here, Rudo, is had I followed CBC, had my strategy right here, look, if I just waited for this trend to change, you have this beautiful cross right here. So you have CBC flip, you have EMA 9 crossing the 20, and you have we're above VWAP. We broke above VWAP. So you could have longed here and took a scalp, and you'd be out of it by now. You'd be out of the scalp trade, and you would have made your 2 to 1 right there, maybe even 3 to 1 if you held on to it.
Yeah, but that's holding on to that bias now, because the short has to work. You want the short to work because you were looking for something. That's why I like the bubbles. Because what the bubbles do now, it doesn't give me, I'm looking for short, when can I get what I want to see? It shows me what is happening right now, and I can act on that as opposed to trying to look for the short. So, I'm gonna just while we're on the topic, what I'll do is I'll load it and put the bubbles on, and then let's quickly just see, looking at the same thing, what happened. What did the guys do behind the scenes at this stage, as opposed to what we were trying or expecting on the indicator? So it's loading real quick, and so here we've got it.
You're on MNQ.
Yeah, I just took S&P 500. I probably should take MNQ. Probably.
Yeah, I would do MNQ just to be. It moves a little differently than the S&P. They do like have a really like a strong correlation, but they move a little differently.
Okay, so here it's loading. So let me load my let me bring my chart up, and so here we've got the same price action. You were doing it on the 3 minute.
I was on the 3 minute. Yeah, so I do 3 minute for like my really, really quick scalps. I'll look at 10 minute though for just like average, like a general view of the trend as well. And I might take trades on the 10 minute as well. But I tend to find it very reliable. 3 minute is very degenerate. So like I said, scalping, and this is with a prop firm, by the way, guys. So on my RR, I'm actually not even losing any capital. I'm losing their capital, not mine.
Okay.
So just keep that in mind. Keep that in mind.
Okay, so here you've got market close basically, or the market being up until the point where you were trying to trade in. And I think the interesting thing is if we look at this from a 3 minute point of view, you've got the chart there. Let's quickly analyze and see how everybody was conducting themselves. Now, remember, guys, this is a given that you don't have the information from analyzing immediately. You have to let the range build. So at this stage, the picture might look like this. Let me just load the 15 minute. The picture might look like this, but as we go through, the picture starts changing and you're getting a better idea or more clearer, crisper idea of what is in fact happening. What I will do is I'll leave it at 50, but because it's not a crypto, so let's make it 8, and a Fibonacci number. Okay, so now you've got the idea. So you can see that as the range unfold, you generated the upper end of the range, and you had the lower end of the range clearly defined as the market is moving. And what you have is on the delta, you had a lot of sellers sitting in there. But funny enough, as we're going through this point, the point of control is sitting down here. So in order for you to realistically start shorting this, just from the delta point of view, would be once this mini starts consolidating at least below point of control. Because, like what was the term you used, Sean? I didn't write it down. When you have that structure flip, you mute it. Just let me know.
Accumulation in the...
No. You had a term, man. When you were drawing a box, you said so, and you said it so eloquently. I'll go rewatch the video.
Yeah,
rewatch
the flip. Yeah. I don't know.
Yeah, something like that. So what you want to see before you can realistically try and say, okay, that this is bears, you want to see that flips, and we haven't done that yet. So all that we have, the verdict for what we have right now is just chop. And when you're in a choppy environment, all you want to do is you want to try and long the bottom to the middle and take profit, and you want to short the top to the middle and take profit, which means that if you look at where the volume is, big players are entering there, and they fail. And then it goes back, big players are entering there. That's trading with the whales, and then they fail, and then obviously the market moves. So if you look at it from this point of view, where would you want to have traded? You almost wanted to try and look for the long. Now, that means if I zoom into what's happening right here, and let me just clean the brush strokes again. What you see here is at this stage, I want to bring up your screen real quick again, just to see where your first trade is. Just show me exactly where your first...
So the arrows, like the ones without the lines. So you'll see this was my first trade was right here, and then my second trade was right here.
I've got it. I'm going to use a call out just to make it nice, and so guys can see there was the one trade, and bad idea. I'm going to use the arrow. So there was your one trade. Come on, what's wrong with me now? I'm struggling to use trading view tools. Oh, there we go. There was the one trade.
That's me every day, by the way. Struggling to use trading view tools.
It was on that.
It gets harder as you get older. Your mind starts to wander, and you're like, oh.
Well, it's 5 p.m.
Early onset
I was
dementia.
I was up at 2 when you were up as well. You know, so we spend a lot of hours. Huh? Sean,
We do.
Blackbeard?
Indeed.
It's not a 2-hour a day job. This.
Everyone thinks they can just like trade for 30 minutes and then leave their computer. Like, and granted, sometimes you can. Those days are great. Those days are fantastic. But then other days you're sitting there for 4 hours going like, what the fuck am I doing with my life?
watching paint dry. That's why I've got TVs. I've even nap time. I've got, and you know, I made it toys. You know, so
that's why I got video games, bro. That's like, I mean, honestly, the video games are a great tool if you're trying to get into a trade and not think about the trade. Like, you just set up the stop loss and take profit, and then you just walk away and you just distract yourself with something entertaining, or maybe you're doing another task, like you're hanging out with your kids, or you're like, you know, go shop for groceries, go do chores, whatever. That's probably the best thing you can do is just walk away after you set those orders, and then, you know, let fate handle it all. Like, don't try to intervene in your own trade.
Correct. There you have it. Don't intervene, guys. Okay, so here we've got the buddy system on there. And first thing I want to point out to you is there's your strong bearish divergence. So the narrative that you want to go short, nothing wrong with that in that instance, because you're at a resistance level, you've got strong bearish divergence. So the big play, I would say, is that the market's going to consistently try and hunt this thou shall not cross line, that area where, you know, the move could originate from. The problem that you have right now is you've got your point of control. Well, all of this price action, this is where the volume is sitting at. So unless you turn the tide around that area, you're going to have all these guys fighting you for your short, and that's why it's sometimes hard to try and trade with. So it's a choppy environment, and hence the fact that the price is just doing it, because there's no real aggression in the market right now. It's just hunting and taking stops as it goes. Until the aggression comes, you don't really have anything. So the play would be, if you really want to try and hit the strong bearish divergence, this is the statistical levels I use. There's my entry. I call this my strat ones. I copied that from Lewis Hamilton in his car. You know, he says, Bono goes, there's strat 1 and then strat 7. It's like, okay, I like that. Let's use it. So that's funny. My strat 1. Okay. And the argument with the strat 1 is obviously you're trying to break the trend as if it's going to change. That means you're going to enter these stress points. And statistically, if we go above that, the deal is off. So this is the point that the market will control, or the extreme. And at this stage, you would have been happy because you've got volume backing it and a nice reaction. But then no follow through. This is the problem. No follow through. So immediately what this should point to, if you look at this, is say, okay, I'm right in the direction I want to try and go to, but clearly I'm dealing with chop. This is not ready to go my way. And at that point of control, you can see here the whales, the bull whales, are entering again just to what? Fuck with your money. Get you out of that.
Yeah, that's exactly what they did.
That trade. So they just messed with you. But now what compounds this to still being more chop is after that, what happened? Bears came in to absorb the supply, and then funny enough, zero follow through, because what do? They went back to the bottom of the range, and it's just chopping. And so the execution, I would say, if you look at it from this point, nothing wrong with that to that point, but just the assumption that we're not getting our trend. And normally what happens, and this is why I move my stop to break even once price crosses that level, if I do this, because what you will find is, as soon as you move around this range, if we start meddling above these levels, this is still okay. But if you start meddling above it, I rather want to take a stop above break even, that kind of thing, because then this is just par for the course, meaning we'll probably start consolidating and run further. And where we're at right now, if I'm still in the trade or I haven't taken the trade, it's probably not bad to hit that short button again, because your risk to reward ratio for this play, where we are right now, is still relatively the same. and your TP for this is still living down here. So there's your 2.5 if you enter in the right area. I always try and get there. Enter in the right area, and then when you cross that level 4, that normally signals a big stronger move, and then you can start looking for continuation, which we don't have right now. It's early days, but that would be the play now. So I would consider doing that as a trade. S&P 500, if you look at this from the point and figure time way, so we're looking at time versus volatility. I just want to quickly see the average price range here is about what, 47 to 49, is about $20. So we can probably move this box to 8, and then just make sure that the scale as well is 8. Why is this not giving me my scale? What's wrong here? Traditional box size 8. Well, it should give me my scale. Let's just try it again. Scales and lines. There we go. 8. So if I do that, and we expand the volatility, all that it is showing to you is, again, if you look at volatility over time, it just supports this, that we're not trending just yet. And the unfinished business lives down there, which means if you're looking for your short now, what will price do once there's unfinished business? It will go and test that zone. So when you have these little gaps, this is normally the nicest tool for me to look at. As soon as you have unfinished business, price will go and fill that. Unfinished business, price will fill that. Unfinished business, price will go and fill that. You know, that's the beauty about the volatility over time as opposed to price over time, you know, because that's how we normally look at that. And then if I bring all that back full round to where we are, going short still is fine. You probably were just too soon.
Yeah. I mean, it's spot on. Spot on.
Yeah.
Very spot on analysis there. I mean, that's exactly what happened. I think just the chop. I took the chop into account, but I tried, obviously based on my indicators, it told me, hey, this is likely to happen. You should short here, you should long here, and of course I followed those through. But because of this chop range, it didn't really matter. Like it was false positives. Yeah, exactly.
You've got an advertisement on their order book saying, "Hey, look at me." Because as soon as you take that trade, you've got a stop loaded in there. So they immediately know what they need to do.
Yeah. And I mean, if you look at the overall trend too, that chop lines up perfectly with Asia and London sessions. So like typically what you want to look for is a break of the session. So like if you look at my chart back here, go to are you on my chart?
Okay, cool. I'll load your time. I'll just switch that on, take the boxes away so you can, for everybody, so you just can see the time zones. It's just going to, there's Tokyo, there's the Asian, there's the London time zone. So normally those are cumulative zones. So we want to see this New York turn into a trend. So I'm going to quickly bring up your chart there. There we go.
Yeah, I mean, and this is kind of like, well, this is what I was talking about. This is from Friday, I believe. This is Friday session. So last Friday, if you look at this, I mean, this is just perfect setup right here. Like you have Asia kind of chopping around, not a whole lot of volatility. Asia closes lower right here. So I'll zoom in right here. Asia closes lower. London rips up. And then we get rejected. Obviously, CBC flip my stuff there below VWAP. Everything looked great for a short right there. Like if I shorted right here, that'd be beautiful. Take profit. Obviously, we break the Asia low right here, and then we bounce off. It forms a new bottom. Bounce off right here, and then New York session happens. New York can't break out of VWAP. Can't break out of the top of London, and breaks below the London low there. And so shorting right here would have been completely justifiable. And sure enough, it would have paid off. Because it was a clear trend forming.
When is that? Yesterday.
This is Friday. Yeah, yesterday was a lot more chaotic. I mean, this is yesterday because of Trump's tweet right here.
Because you can see the similarities between that and now from Friday. So that makes for an interesting chart or interesting discussion point because you were range bound again. I'll quickly just load while we're on that topic. So keep your screen like that, and then I'll bring mine in. So I'm in the same area. This is Friday. Wednesday. This is Wednesday. Let me just get you Friday, Thursday, Friday. So here's Friday. And so what you have is you've got that same setup starting out with the market first being range bound. It's the Asia market. So you can see there's Sydney Open, Tokyo Open starts roughly there, and then from that point onwards, we start moving into the other one. So you do have that already sitting in there, and then what happens is if we look at the visible range, the volume around that range. So let's start there. There's Tokyo, all these prices. Let's just keep it at that for that scenario. You can see that what needs to happen first is you'll have your divergence and your break of structure, and it starts moving. But the point of control where all the bulls were needs to be lost first. And it's at that stage where you start thinking the trend is on. And funny enough, even then, what does it do first? It runs, give you the clue that it's going to work. But then it goes and takes everybody out first. And then takes the move. And that's that chop, because we're still dealing with, this was the bottom of the range, and we need that reaction from that point of control. So you'll be in your short around this range if you were doing it, and then it takes everybody out and people start thinking bullish. And funny enough, there you can see there the bulls, they flip, they get taken out, and then you can just use the indicator for that matter. It just makes life easier.
Yeah, exactly.
To do, and it starts running and ripping, and then it does the exact same thing. Now, where's the bears? No bears here. So what's the market going to do? It's going to go literally back to the bears, where the bears was the last time round. So it traps people in that idea that it's long, and then New York opens again, and then Wales, they come in and say, right, let's make this a good week.
Let's make them bleed.
Let's make them bleed. Let's make it a great. And they add to their positions. And now what do you have? The market turns bearish again. The candles get override bearish again. So everything is great. And you do have whale volume consistently kicking in to keep pushing the price down. And so where we are right now, given all this information, all that we're doing, you can clearly see there's nothing happening here. There's no follow through. It's just chop. As a scalp trader, this is staying in your hands. Being in USDT or the other side is the better trade. Until you get that clear confirmation, the story makes sense regarding how everybody's positioned and compromised. You should actually just wait.
Yeah, you should literally just wait. You should not be.
Yeah. So your indicator might not work nicely now, and your thing. But if you look at what people are doing, it's saying you just wait and look at it, how it's squeezing. And I mean, if you're in a short right now, if you took that short, you're sweating bullets right now. Oh, my short's going to get taken out. I didn't take profit. I want this thing to go down. And you know what people are going to do? They're going to start moving their stops closer. They're going to get nervous. And what is this thing going to do? Rips in there, maybe confirms, and then starts running. So wait for this, showing you there's going to be a party losing pretty soon. Once that party loses, we must jump in and ride this bugger.
Yeah, exactly. I know we're nearing the 2-hour mark here, so we're at the 2-hour mark actually.
No,
it's been a great stream, Rudo. I do want to say I do have a hard stop here shortly, so I want to go ahead and maybe just go around and get some final takes, final thoughts on the conversation and maybe on the market today, and then we can start wrapping up here.
There's about 250 people joining in live right now. I want to say thanks to each and every one of you guys. 246. Come on, let's see if we can make it 250. Joining the live right now. I want to say thanks to each and every one of you guys. And like Will says, let's take final points. Sean, let's go to you. Then we go to Blackbeard, and then you guys can. Well, you can finish it out for us.
Yeah, I'll just share my screen real quick. If you can switch over to my screen, just this, guys. Whenever you look at a chart, and I've drawn some areas here. This is a Bitcoin chart on the 15-minute. Again, I'm more of a swing trader, but I look at it in this light. I have what are called order blocks. Order blocks are simply, where is liquidity going to sit? Where did people enter along and they've set their stop, right? And where did we not revisit on a chart? We didn't revisit up to this wick. We got halfway there, 3/4 of the way there. We didn't take out the people that set a stop right up in here. So there's all sorts of different stories that are told with a chart. We never came back and revisited this zone. We never revisited this zone. If we come down here, I'm looking for a long. I'm looking for a long right around anywhere between 69.6 and the mid 68,000s. We could draw Fibonacci. We could see all sorts of different things, right? But the true story is this: we need to look for where are the market makers going to send it? I think we go up and we wick and we have a good short setup right here, right in this zone between 72 and 72.5. Great short setup. We probably have plenty of shorts right there, guys. Right there. Now I'm on a 15-minute. This is a really low time frame, but it wouldn't shock me. We send it back down. We liquidate these longs down here, and then boom, we send it up. Now I can look to enter a long as early as this zone, 69.8 to 69.3, somewhere in there. That makes sense. But it wouldn't shock me at all if we see a long entry just down below this. Okay. And I think that could be something that could send us up much higher. We could attack 74, 76. We could take it all the way to 80K. Who knows? But it doesn't matter. Again, when I enter a something on a 15-minute, I'm probably not targeting 80K. But just a quick lesson for everybody. We want to look at order blocks. Where would people put their shorts or put their stops? And I just target those. Target for levels that haven't been revisited, haven't been taken out, because if somebody put their stop there and didn't move it, it still sits there. Okay. Does that make sense?
Beautifully. And I mean, if you consider this now, and I don't want to turn into Iran, this was the Bitcoin where I said, this is where people are going to want to try and go long on the divergence, and you shouldn't, because look at what happened. There's zero follow through after that point. And if you then use that same chart that you've got, so I'm going to go 15-minute. And I mean, the guys will be able to remember hopefully where all those areas are. But there's your 15-minute target. Look at where your order blocks are. You got that drawn out as an order block. You got that drawn as an order block. And there was the last time the bulls really united to drive price on. So anybody that's in here, the market's going to want to go and grab your stop. So if you look at this from this point onwards, what did we have? We had guys buying the top, getting taken out by bears entering the market and getting potential follow through. And that's why this whole ground, I mean, we could wick down, grab up and start consolidating. I mean, that's the beauty about it. And that's why these blocks are there. And I quite like that. So
yeah. Or we could wick up and take those shorts that just entered out.
Well, but
I mean, that's the thing, guys. This is why it's so hard. There is no rule. No one makes rules. The market sends it where it sends it. We take it as
what do? You trade when there's a trend,
right?
And understand, if it's a choppy environment, you need to be in and out. Get your money. If the market is kind enough to give you a little bit, take it and say be thankful for it, because it's gonna literally go for stops. That's all it's doing at this stage. As soon as there's a party that's in favor, it's going to go for that area. So quite like that.
Well, Big Willie style, I know you got to get out of here, man. I got to get out of here too, guys. Thanks again for having me. This has been a really fun 2 hours, and I'm honored. I'm really honored. And honestly, if you do send me that indicator, I'm even more honored. That's incredible. I know you work hard on that, and I appreciate you sharing it. That's
where did you see? And
hey, Sean, you're coming back on. You're coming back on the rest of the weekend next week. Come on, dude. You're more than welcome to.
We'll see. We'll see. I do have an actual job, not just trading.
No. You're going to quit your job. It's fine.
No, it's fine.
So you can see now there's the breakout. So you've had, just as an interesting point here, look at this. Look at how the market's now reacting. Whale bears, now the breakdown. So all this hopium has now been taken out. Stops hit, oops, now it's running. And if we stay in this area and we start consolidating, we take this low out. That's your continuation scalp short, guys, because then we clearly have an insane bear trend. So all that you need to do trading now-wise is forget about RSI, forget about all this. Now you're trading what other people are hoping is not going to happen. Exactly that play where you want to say it's going to go down. So as soon as we start trading and close 1 minute candle there, it's more for that. And that's the key. And you hone this by looking at a 1 minute. So when somebody starts giving me a 4 hour, I become really bored in the sense of yawning, because it's the same thing playing out, but now it's playing out over
much slower
hours and stuff.
Dude,
but
try swing trading on the monthly.
Hell no. I'll leave that to you, Sean. I'll leave that to you. Blackbeard, I would love to hear from Blackbeard though before we get out of here too. Blackbeard, you got any comments, thoughts, trades, advice?
If I can share my screen, I'll just take 2 minutes.
We still need to talk about your additional points, so maybe we can do that afterwards, or you're going to ask that now.
Do that anytime.
Spider lines.
Spider lines, the spider lines. He's a creepy crawler, Sean.
So I'll start with the basics, Rudo, that you and I went over a long time ago. However, it was really hard for me to describe what it is. So I'll just give this to the viewers. I'm going to put the coordinates up for this fan on a 9-minute. They can put it on anything they want, but this is the bars and the price. If they want to make this fan, I can guarantee you that it's going to be valuable, and I can show you how I would have traded this one. But if they want to pause it later on or something like that, here's the coordinates for this GAN fan. They're made from my nodes. These nodes print, and then when they print, they're very deliberate, and they give a lot of data. And now there's a trend line that connects these nodes. What I started doing was making a GAN fan between those two nodes, either the most local or the longest nodes. It's an art to that. But here's this if you want to on Coinbase 9-minute for this fan, and then this one right here. This is the red fan. So I traced the red line. Let me go ahead and see if I can get those to pop up. So that's the green nodes I highlighted there. Now I'm doing the red. So you would connect this one to get this red fan, and here's the coordinates for that. And that's the easiest thing I can think of to maybe give somebody a little chart. You can probably trade this for a lot longer than you think, even though it's a 9-minute chart. You can probably trade it for a couple days at least, maybe even longer sometimes. But because I can switch between intervals, and these nodes will just barely change. Like it'll probably give you very similar trend lines until you start getting into like 2 hour, 4 hour. So, but yeah, that's how I would trade it. Now you can see with this one on, I mean, it at this point, I could have traded everything to the right, and the same with this one. And now these are giving you some pretty good some pretty good trends for you to trade. You can see a steady bounce there. And now that it's failed this, I'm going to look at 70,371. This trend's going to be meaningful. All this stuff. So I'll actually mark these just in case, and then you guys have something to fart around with if you want. People that don't have the actual indicator.
Nice. Very nice, Blackbeard.
Cheers, man. Yeah, thanks. Okay, so we've got 260 people joining live right now, but I think we'll close it out for us.
Rudo, did you want to have any comments or no? You good?
I feel like I spoke a lot during the stream,
we love hearing you speak though, Rudo. We love hearing you speak. That's the most beautiful thing. But Rudo's takes are spot on. Sean's takes are spot on. Blackbeard's takes were spot on as well. Great analysis too. I love how we're all using different charts and different indicators. I really do enjoy that. Get different perspectives on everything. Which is why I love doing these shows. So everyone, if you're tuning in now, definitely check out every one of these people on the stream here. Check out Sean, check out Blackbeard. If you're not following Rudo, if you're not following his Crypto EMC YouTube channel, you definitely need to be. You can see the X tags down there on the bottom. There's little tickers there. So definitely follow all of our Twitter pages as well. If you're looking for some more alpha, we're constantly posting alpha. I believe Sean, did you put Sean's Twitter down there? Rudo?
It's gonna come all right.
I believe he's right
Rudo's
there.
all
Yeah,
over
cool.
it, man.
Yeah, perfect. So there's his at the very end. That's Run Roamer. I actually love that handle. That's a really sick handle, but way better than mine. But all in all, had a great conversation today, guys. A lot of alpha being spilled. Like I said, make sure you're following all these legends. If you enjoyed the stream today, we do this every Wednesday, 9 a.m. Eastern. So we are live every Wednesday, 9 a.m., showing our charts, talking all things trading. We also do spaces every Tuesday through Friday, though, at the same time at 9 a.m. Eastern. So we always talk about our charts on there, talk about our trades, talk about the market in general. If you value our insights, if you enjoyed today's stream, I think you'll enjoy that too. So check us out tomorrow, Thursday, 9 a.m. Eastern. But until then, everyone, manage your risk and stay profitable if you're profitable, and enjoy the rest of your day. And also a very merry and happy peace out, everyone.